Hey everyone, we're going to be going over the crypto news of the week as well as some of the charts. Residing just shy of the all time high, Bitcoin continues to consolidate with long term investors beginning to reaccumulate coins for the first time since December of 2023. Alongside this, an historic first tranche of Ethereum spot ETFs have been approved in the US, seeing a 20% surge in the price of Ethereum. And the big news of the day, Mt. Gox moved anywhere from 30,000 to 106,000 Bitcoin to an unknown wallet. And that probably has to do with the distribution from about a decade ago. Taking a look at the biggest players in the market, both Ethereum and Bitcoin have shown relative strength after a lengthy post all time high consolidation, although prices have remained choppy and sideways since March. The SEC has surprised the market with the approval of the Ethereum spot ETFs, which has resulted in strength for the price of Ethereum. Bitcoin US spot ETFs net flows have once again turned positive after 4 weeks of net outflows, suggesting a return of TradFi demand, and long-term holder spending pressure has cooled off significantly with investors back to accumulation patterns, suggesting volatility is required to motivate the next wave. So, taking a look at Bitcoin first, after recording the deepest correction on a closing basis since the FTX lows, which is around 20%, Bitcoin has recovered back towards the all time high, reaching 71,000 on the 20th of May. And from a comparative point of view, the drawdown pattern across the 2023 2024 uptrend appears to be remarkably similar to the 2015 2017 bull market. That uptrend occurred during Bitcoin's infancy when no derivative instruments were available for the asset class. And the parallel we can draw to the current market structure suggests that the 2023-24 uptrend may be largely spot driven, and this view is supported by the launch and inflows from the US spot ETFs. Ethereum has also seen notably shallower corrections since the FTX lows compared to prior cycles. This structure infers a degree of increasing market resilience is developing between each successive pullback alongside a reduction in downside volatility. However, it is worth highlighting that Ethereum has experienced a slower recovery relative to Bitcoin, and ETH has also notably underperformed compared to other leading crypto assets over the last 2 years, manifesting in a weaker ETH to Bitcoin ratio. Nevertheless, the approval of US spot ETFs this week came as a widely unexpected development and may provide the necessary catalyst to stimulate strength in the ETH to Bitcoin ratio. If we examine the rolling performance of the Bitcoin market across the weekly, monthly, and quarterly timeframes, we can see generally strong performance, recording values of 3.3%, 7.4%, and 25.6% respectively. To highlight periods of particularly strong price performance, we can count the number of trading days within a 90-day window where performance across all three timeframes exceeds 20%. Only 5 days through the last quarter have reached this threshold so far. In prior cycles, this count reached between 18 and 26 days, which suggests the current market may be somewhat more measured relative to historical bull markets. We can assess Ethereum under a similar framework and can see the dramatic impact of the ETF approvals. The news motivated almost instantaneous buy-side pressure, with all three timeframes printing their first 20% price movement since late 2021. And if we consider the sizable impact and influence the spot ETFs have had on Bitcoin since the turn of the year, the ETH Bitcoin trading pair may be exhibiting early signs of a more promising road ahead. So taking a look at the Bitcoin chart, we are here on the daily, and as you can see, the bull flag is still intact. And we did retest it over here with a rejection and a 9 on the trend reversal indicator. We also have this falling wedge, which ended up playing out almost to its target price of about $73,200. And as you can see here, we are above all of the simple moving averages, which is a good sign and a sign of strength. And I do have the SD boring indicator. What that is, it helps in identifying areas of supply and demand, and there is no supply above the price as of yet. So we just have this resistance line. And if we can get above that, then I expect to test all-time highs at about $74,000. So as we zoom in here, I have the descending parallel channel, which represents the flag of this pole and bull flag formation. And I do have the significant demand zone, which we ended up retesting. Now, the one thing I want to show you about how important supply and demand zones are, along with resistance and support lines, which they can be both the same thing and separate. So you can have resistance lines that aren't necessarily associated with supply and demand zones and vice versa. But usually when you are placing your chart lines and zones, they usually have some confluence. And that's the reason why I was able to place this yellow line here. So this was my projection line from the 6th of May. And this was based on momentum from our oscillators. So we had momentum that was going up to the upside. We did break a downward trend right around here, and that was reflected in both Market Cipher and the MACD. And all I did was take where price was currently and where my major supply and demand zones were. And all I did was take the line and expected a rejection at a major supply zone, and then a rejection from a major demand zone. And usually, you could hit that more than once, but here all I did was had the price go through the supply, expecting it to hit resistance and a supply zone up here, reject, and confirm that this supply or prior supply zone is now being confirmed as demand, which we did, and I expected to actually punch up through here. Now the timing was off, obviously, on this projection line, but if you move it, it matches perfectly with the price action when you adjust it for timing. Now, the failure here, so this projection actually failed at this point, punched through a small area of supply, and this was on the 1 hour, and we got rejected, and that was actually last night. And that was because of an external catalyst, which was the Mt. Gox Bitcoin wallet movements. Otherwise, I think we would have probably retested this area of supply here, maybe made a double top, potentially, we don't know. Or we would have punched through it and confirm it as resistance and continue upward. So that's just something to think about when you are doing your own charts. So we do have this green trend line. So the trend as of current is still intact. We are still in an uptrend, which is a good sign. We are still above a significant area of demand that has been retested, which is a good sign. We are above the localized point of control, which is a good sign. The only time I would actually become worried is if we punch through this area of demand right now, confirm it as resistance, and then therefore an area of supply. And then we could probably retest the next major zone, which is down in the low 60,000, 62 to 60,000 level. And worst case, we would come all the way down to the lower end of this parallel channel. If we break through that, then the next level we have is going to be the 200-day simple moving average, which is currently at around $54,000. So I think we have very solid price action. As you can see, we do have a triangle formation that I did draw out here. We may be able to find a falling wedge, but as you can see here, we did have a rising wedge, and that actually did play out. But before we go on, we'll take a look at the daily stochastics and oscillators. So looking at Market Cipher, you can see we did have a wave and then a trigger wave to the upside. However, we did have red money flow, and so it wouldn't be necessarily a trade I would have taken. But if you look here, and this is pretty good on the daily, that trigger wave and it being bullish divergence anyways. And that green dot coincided with this candle right here, and we had a pretty good rise of about 13%, 10%. So that was a good sign. And the big thing here that was the change in catalyst here for bullish action was the bullish divergence here. And as you can see here, as RSI dips and then finally breaks and confirms as resistance, there is generally a rise in RSI that coincides with bullish price action on the daily chart for Bitcoin. And this was back on the 13th of May. We broke this RSI resistance and then we shot up, and this is going to coincide basically exactly with Market Cipher and the bullish trigger wave to the upside. So that is a good sign. We do have momentum on the MACD as well. So those are all good things. Of course, it looks like there's some divergence potentially occurring, and RSI is pulling back down for probably a bullish retest of this resistance line as support. And when we look at Market Cipher, a price never goes up at a straight line, and we have been losing some momentum with this momentum wave, which is perfectly normal. And we're potentially going to print another wave or another green dot, which will indicate a momentum back to the upside. Now, the one thing that is concerning is that this money flow has basically turned down, and that's really not something you want to see on the daily, but it does occur, and we do have evidence of this back here. We dipped, we were going to rise again, and then we lost that money flow and we dipped very, very low. But what you really want to see is this large gradual hill growing of money coming back into Bitcoin. So that is the daily. For today, I'm probably going to be neutral to bearish. Not that we're going to go any lower than we are right now below this demand zone, but as you can see, we did have this red engulfing candle retesting this area of demand, and I expect price to pretty much settle out here. And then hopefully over the next 24 to 48 hours, we confirm this as support again, and we continue back up to the upside where we can test the upper parallel channel of this, what we hope to be a bull flag. So taking at the lower time frames, again, we had this rising wedge play out, but we are still within this fairly neutral, potentially bullish triangle, depending on how you look at it. Based off the angle, this could eventually become or form, it actually could come down a little lower, and this could be a falling wedge. Or we could stay within the triangle and then finally break resistance, confirm it as support, and then continue higher, maybe in conjunction with this green trend line as well. So the lagging span is free and clear. We are consolidating around this point of control on the visible volume indicator. We are below the cloud as well, and the conversion line is below the baseline here. So bearish to neutral as of today. And again, we're probably going to consolidate here until everyone feels more comfortable about the Mount Gox news. And even if everyone sold today, that's only 2 to 3% of the total market cap of Bitcoin, which is currently at about $1.3 trillion. And a lot of people have a hard time conceptualizing this. They see billions of dollars moving around on the Bitcoin chain and they start to freak out. But they need to understand that $1 trillion is actually a truly incomprehensible amount in terms of number. So, I mean, it's a fraction. $1 billion is a fraction of what $1 trillion actually is. And maybe I'll do a video on that The Visual Capitalist is a great website to really understand what a trillion is. So that is my analysis and news for Bitcoin and the crypto market today. If you have any questions, please let me know. Like and subscribe. And I look forward to doing the next chart. All right, thanks. Bye.